So good afternoon, everybody, and thank you, Adam, for giving me the opportunity to discuss the strategic implications of data protection laws. This is joint work with Paolo Ciocca, who unfortunately could not be here today. So let me get started by bringing you back 70 years into the past, to April 4th, 1949, when the US, Canada, and 10 Western European nations signed the North Atlantic Treaty, thus giving birth to NATO. And in the preamble to the treaty, we can read that the parties are determined to safeguard the freedom, common heritage, and civilization of their peoples, founded on the principles of democracy, individual liberty, and the rule of law. And of course, NATO is known for military cooperation, and especially for the mutual obligation of military defense among members. But the way the founders chose to word the treaty makes it quite clear that the military aspect is a means to an end, is not the end itself. The ultimate overarching goal of the transatlantic relationship, as enshrined in the 1949 North Atlantic Treaty, is working together to promote, protect, and defend these core founding values of liberal democracies. And in this talk, I'm going to take a look at how the transatlantic relationship is faring at defending these values in the digital age. Today, warplanes, tanks, and missiles are not necessarily anymore the prime weapon of choice for anybody who wants to undermine these values domestically or internationally. There is a lot of harmful potential in big data and AI. So let's go back to the present and take a look at 4 out of the hundreds of headlines that are coming out recently on a possible misuse of data and AI. Let's start from the US national security investigation into TikTok that was opened a couple of weeks ago. TikTok is a social media app. If you have kids at home, you probably know it. On the surface, it's very innocuous. It's an app used by teenagers to film themselves while they are singing, dancing, performing fitness tasks. And like every other social media app, it collects a significant quantity of data on users, not just the content they upload, but also information on the content they like or dislike, their network of friends, their physical location, the kind of device they're using. But the difference between TikTok and other apps in the same space, such as Instagram or Snap, is that TikTok is from China. So it's owned by a Chinese company, and US lawmakers have recently been raising concerns about the fact that maybe the Chinese government can access data gathered with TikTok. So this app could be an espionage tool. Or there was recently a report in The Guardian about the fact that TikTok's moderators were censoring videos relating to the Hong Kong protests. So it might even be a propaganda tool. And that's why, among many initiatives taken by US lawmakers, there was a CFIUS review initiated a couple of weeks ago. But this possibility of use of data and AI that threatens freedom and democracy is by no means, and I'm going to go back to this again and again today, an issue related to a single country or to a single product. Actually, most of the headlines and most of the lawsuits are about companies that are not Chinese. So recently, Google was accused of secretly feeding personal data to advertisers. Amazon entered into an agreement with several cities' police force to share the video feeds from the Ring smart doorbell, but privacy advocates are protesting this, saying it's a slippery slope towards a surveillance state. And also recently, Facebook, which of course has been at the center of a lot of debate over the manipulation of elections, Facebook has been shown to classify about 700,000 minors as interested in gambling and alcohol. These are automated classifications based on the videos you watch, the content you post, the pages you like. And these classifications are then sold to advertisers for them to target the message. So it's potentially a way to help advertisers to publish harmful content on gambling and alcohol for an audience of minors. So let me take this to a higher level of abstraction. I'll take a leaf off the page of Shoshana Zuboff's excellent book on surveillance capitalism. Zuboff defines surveillance capitalism as a business model based on behavioral surplus fabricated into prediction products. So technology companies collect a lot of data. This data is a granular, real-time representation of individual behavior. This gets fed into so-called prediction machines, machine learning algorithms, other forms of AI, and it is turned into predictions. What am I going to like in terms of content? What am I going to want to buy? How much am I willing to pay for it? What kind of political message I'm most sensitive to? And one important side to this story is that the fact that companies are able to do that is really just one very small step away from government surveillance. It's basically the same thing. Whoever has access to the data is able to reconstruct low-cost granular predictions of behavior. And it doesn't really matter if it's a company that's doing it or a government that's doing it. It's the same issue when it comes to individual rights, and I'm going to come back to this. And in some countries, the emphasis is on the corporate side. In some other countries, the emphasis is on the government side, but it's all part of the same problem. And this problem is the unprecedented power asymmetry between large data collectors, be them corporations or authorities, and data subjects. So the key challenge for liberal democracies, and really this is the whole of the message I wanted to give today, is bringing the digital sphere fully under the rule of law, making sure that individuals enjoy the same rights and freedoms online and offline. This is not something that has already happened, not by any means in the whole of the world, not with any certainty, and not in all of the countries that are founding members of NATO. So going back to the ultimate goal and purpose of the transatlantic relationship in safeguarding individual liberty, democracy, and the rule of law, this is an existential challenge. It's not about tech. It's not about tech policy. It's about reiterating the values that we pledged to uphold in '49. It needs to happen on both sides of the Atlantic, not necessarily with the same tools, but with the same spirit and with the same goals in mind. And it has to happen at the same time vis-à-vis corporations and governments. So let's take a look at what several advanced economies are doing. The European Union pioneered the digital rights model with the General Data Protection Regulation, which builds on previous legislation. GDPR was approved in 2016, came into force in 2018, and this model has then been adopted by Canada, Japan, and by very important emerging economies such as South Korea and Brazil. The core point of the digital rights model is the explicit definition of the rights of natural persons vis-à-vis any entity collecting data from and on them. And boundaries on which data can be collected and can be fed into AI also constrain the output. So, for example, there have been several issues with so-called algorithmic bias, where credit worthiness is wrongly assessed on the basis of the color of applicant's skin. If you never give the machine data on the color of an applicant's skin, they can't decide whether to give them a loan based on this or not. This is just a very simple example on how control over data purpose limitation. Data collectors can acquire data for one or more purposes that have to be specified transparently to the data subjects. Minimization, you only collect the data that is strictly necessary for your purpose. Storage limitation, accuracy, security. And the two key features that I want to bring your attention to are, one, this digital rights model is micro-founded. So it works at the level of individual pieces of information. Data is read as an attribute of the self. And that's pretty much the only approach you can have if you want to make this about rights. And second, it's extraterritorial, meaning that the digital rights jurisdictions don't allow the export of data on their citizens to jurisdictions that do not ensure the existence of adequate data protection safeguards. And let me just go on a small aside about the meaning of privacy in the digital age. The digital rights model embeds an understanding of privacy that goes far beyond the fairly common misunderstanding that only people who have something to hide care about online privacy. Three economists, Acquisti, Taylor, and Wagman, recently gave a very interesting definition of privacy. It pertains to the boundaries between the self and the others, and it is not the opposite of sharing. Rather, it is control over sharing. And the fact that controlling what you share about yourself, constituting a precondition for freedom and autonomy, is pretty clear to everybody offline. You don't go around sharing your political opinions, your sensitive personal issues with everybody, and not because you're doing something wrong, just because in some cases it makes sense, in some cases it might be used against you, in some cases it's just none of the other person's business. But this gets lost in the translation to the digital space because we don't quite understand how much data is being collected. And the underlying idea of digital rights is that control over data footprint is a precondition for freedom and autonomy in the digital age. So the digital rights model is embraced by all G7 countries except for the US. So what's happening in the US? Data protection is mostly regulated at the state level. And in most states, with the exception of California, it's weaker compared to the European Union and the other digital rights jurisdictions. Federal laws only cover specific types of data, for example, minors or health data. And the reason why a long discussion on a federal general purpose data protection law never came to fruition is that most lawmakers dislike the digital rights model on economic grounds. The consensus, or at least the majority, goes in the direction of thinking that putting too many restrictions on data collection and use is going to kill innovation and put at a disadvantage technology leaders who are mostly Americans. But there's a big problem with this kind of reasoning. First of all, on economic grounds, it might be only true in the short term. But most importantly, we can't put on the same scale loss of economic profit and the fact that we need to have the rule of law in the digital space. If you leave the digital space as a relative no man's land with data brokers who buy my data from several companies and resell them packaged to third parties, and I don't even know what's going on, this is a way of spreading the power that I mentioned before that data collectors have to know, interpret, predict, and influence my life, and I do not have any legal recourse. And this is not anything that you can compare with a strictly economic argument, which, by the way, as I said, is also partially wrong. So, on the other hand, while the US has been really reluctant to constrain the homegrown surveillance capitalists, it has been super concerned with Chinese ones. Of course, the most striking case is Huawei, but there have been other smaller cases getting to the TikTok case that I mentioned before. So the US government is not really concerned with the excessive power of US corporations over people's lives, but they get very concerned when it comes to Chinese corporations, which might or might not be working with the Chinese government. And so, since there is this asymmetry in recognizing the rights argument, the toolkit that has been chosen is not data protection, but national security. And of course, there is a place in economic policy, in policy in general, for macro-level national security tools. But those tools, by definition, protect nations, not individuals. They assess, they protect individuals only incidentally. So they do not solve the problem of digital rights. I mean, you can kill off as many Chinese data collectors as you want, and you should, actually. I mean, if these are not playing by the rules, you should, treat them like everybody else who is not playing by the rules. But you need to have the rules to make this universal. Otherwise, you need to intervene with tools such as the CFUs every time. And this is also inefficient because there's a new app every day. China is very prolific in producing technology. You can't have a CFIUS review for every new app. And most importantly, talking about this strictly from a national security angle gives the wrong impression that this problem is about China. No, this problem is not about China. It's also about China, because China has a digital sovereignty surveillance state model that is not compatible with the transatlantic values. But this is not merely a Chinese problem. So down to my last slide, my recommendation is that the US should embrace the digital rights model. Now, GDPR as it is not necessarily perfect. It has been rightly criticized for example, favoring bigger companies over smaller ones because of compliance costs, or for not being effective because people don't actually read 200 pages of privacy notices. But the US could really help greatly in improving upon it, because US companies and academia are the frontier of research when it comes to privacy-preserving techniques, such as differential privacy or the generation of synthetic data that combine the objective of data protection with the objective of extracting the maximum economic value from data. So the US could really help in this direction. And if we had a digital rights front that included the US, that would account for over 50% of world GDP. So imagine this at the negotiating table, for example, in the WTO e-commerce talks that started in January and now are stalling because there's too many fragmented positions. If you had a wholehearted embracing of digital rights on the part of the US, and the US maybe even led this front and sat at the tables together with Europe, Japan, Canada, South Korea, Brazil, this could have an enormous impact on negotiation power, and trading partners will be faced with a choice: either provide adequate data protection or just lose market access to more than 50% of the world and the whole of advanced economies. For example, this could be instrumental in the debate that's underway in India. India was thinking about embracing the digital rights model, and then it decided to shift towards a more nationalistic data localization approach following the model of China and Russia. Maybe if this carried the risk of losing trade with all of the G7, it would pan out differently. And of course, some countries will choose to keep their surveillance state, never embrace the digital rights model, but they would not be able, if the US transitioned to this model, to harvest data or conduct influence operations in the digital rights countries, starting from the US itself. That's all I have, and thank you. So it's now time to start with a very interesting panel on the new generation payments, promises and risks. I would invite the first speaker to come to the podium. It's Elise Hulik. She's a Vice President and Senior Managing Counsel on MasterCard's Privacy and Data Protection Legal Team since February 2018. And she's going to be discussing how the financial sector is addressing the data protection challenge. So thank you, Elise.
Thank you, Claudia. And thanks, everyone, for allowing me to come and share some thoughts with you. I'm really excited about today's panel, and the topic happens to be close to my heart as a privacy professional working at MasterCard. You know, a lot of the themes that Claudia raised in her talk, I think, are going to probably be woven into many of our talks as we continue out throughout the day. But the reality is that you can't ignore the influence of the regulation, the GDPR in Europe. And while it was an evolution of their privacy posture, they definitely planted the flag globally, and countries are taking notice. It has hit our shores. If you weren't already aware, we're about to have a comprehensive privacy law for the state of California take effect in January. So very soon. And we're working toward sort of knowing and understanding how to live and work in this digital space, advance innovation, promote use of data in the right way and technology the right way, but also think about the things that the GDPR highlights. You know, one of the items that Claudia pointed out was that there is a tension sort of between the emergence of technologies like machine learning, artificial intelligence, things like that, and requirements within global laws like the GDPR about automated decision-making, profiling. Where does that fall? When and how you can use certain categories of data. And do so sort of responsibly. And that debate is carried over, as I mentioned, to the United States. It's present in Brazil. There'll be a new law there next year. Thailand just adopted one. So this is, again, a global phenomenon about sort of how to reconcile a space where, if you think about laws in general, historically, almost every other sector of law, you get to look to the past. Right? You get to look to prior decisions that have been made. You get to look and understand sort of precedent and where things have been before so that you can create a path forward. In this space, there's nothing to look back at, right? It's being built as it's all happening, right? And that's a very real challenge for the regulatory community, too. I have to give them some credit in the sense that trying to define what to do and do it responsibly with the law is a very difficult thing, because if you're too prescriptive, you emerge with a rule or regulation that won't be sustainable or scalable, as the technology is rapidly evolving and changing in this space. And in the financial sector, those who have operated in the financial sector, particularly in the United States, have been very, very heavily regulated, right? And so there are sort of rules of the road and ways that we have governed our companies, our ecosystem, to address concerns of the regulatory community, to make sure that financial information remains safe and secure and protected and used responsibly. And certainly as industry progresses, you don't want to be put in a situation where new technologies are available, but you're not able to make use of them or implement them in an appropriate way because you're confronted with very restrictive regulatory requirements. So there's this balancing act that really needs to occur across the board for all economies to move forward and to thrive. And so, when we think about that at MasterCard, part of the reason why I joined this company is because they really do take privacy and data protection very seriously. They think about how it is a part of the fabric of doing business. I work on a team of about a dozen people who are located in the North American market, and then we have others globally. And we're embedded with business teams. We're helping design solutions from the start. And we use, you might have heard the phrase privacy by design as a methodology to sort of drive our behavior forward, right? So when an idea comes about, people happily come to my team and we sit down and we talk about, what do you want to do? Why do you want to do it? How do you think you need to accomplish it? And then let's talk about how we maybe really will accomplish it. What kind of information's involved? And really, at the end of the day, we're talking about sort of core values that we've evolved to over the years that really align with the spirit of a lot of the digital rights work that Claudia was referencing. So thinking about information that's personal from the lens of the individual, making sure that the company is being responsible with the information it's been entrusted with, and really understanding its position in the ecosystem to make sure that where we are able to influence behavior and partner with responsible, like-minded companies, we're making those choices so that we're developing products and solutions that not only benefit individuals, enrich their lives, but candidly are going to be a little more scalable and sustainable as this wave of regulation comes along to try and govern the space here. So one of the things that we've really thought about, and we announced very recently, is a global data responsibility imperative. And really at the heart of that, what we're trying to do is think about data use of technologies, almost from a decency perspective. Of course, we're going to comply with the law. Of course, we're going to satisfy regulatory requirements. Every company needs to do that. But there's sort of this companion question to, can I do something? And then should I do something? Is this right? Is this valuable? Does this align with our corporate values? Does this align with the way that we vary our front and center about treating individuals with respect? Making sure that they have a clear understanding of what personal information, to the degree we take any in, how it's handled, who it might be shared with. And again, these are the themes that are woven into all of these new data protection laws, these data rights charters, things like that. And in the financial space, it's particularly sensitive. And again, like I said, in the United States, we're used to that regulatory climate and environment. But this is a different way of looking at this type of data beyond something that, and I think maybe historically, if you thought about data protection, you probably thought about data breach. Something's going to hack into my system, I'm not going to have access to it, or somebody's not going to be able to use this information, or they will be in the wrong way. And this is a much more holistic way to look at data, right? So we are very front and center about our core values on personal information. We believe that individuals own that information that is theirs. It's their personal information. They should have the ability to control it, to understand sort of when and how it's being used. That uses of that personal information that you've been entrusted with should be beneficial to individuals. It should make their lives easier, better. And really, our obligation overarching all of that is protecting that information, right? And then again, thinking comprehensively what that might mean. We think about it, of course, from security. Security is the foundation of our entire payments network and how we function as a company. But we also think about transparency. Not only transparency about our data handling practices, but how we are transparent with other parties in the ecosystem about how we believe we should be accountable over this information. And part and parcel of that accountability piece does come from the privacy by design work that I was talking about a little bit earlier, making sure that we really are being thoughtful about it. Part of it comes really from the tone from the top for leadership. So I'll give you a good corporate example. Those of you who have to live with corporate objectives at the beginning of the year, and you're told sort of this is what you're going to accomplish over the course of the year. Our leadership team made privacy by design a corporate objective for everybody at the company this year, right? So we have that executive level buy-in, we have that kind of support, and teams know and understand that managing this information appropriately is a shared responsibility across teams, right? So clearly it's in my rubric. I've got privacy and data protection literally in my division name. But everyone on down the line, the O&T professionals, the HR professionals, the digital teams, the labs teams, the payments, new and old, as they say, everybody believes that this is a core responsibility of their new job. And that's how you end up effectuating sort of a culture shift. Once you can tee some of that up, then when these new laws come around and emerge, you are much easier to sort of pivot and respond to changes in the law. And the reality is, the United States in particular is going to be a very challenging climate over the next couple of years for many of us, because while the GDPR was very impactful and required a lot of work to get ready, it was sort of one way of handling things for a particular geographic region. And the way we have traditionally managed information and regulations related to it in this space in the United States is to do it at the state level. So the closest companion I can give you is data breach. Right now, we have 54 different data breach laws for the United States. So it's all 50 states, DC, 3 US territories. And they are not identical across the board. So when a breach happens, you have to sort of map to, well, where did this person reside? Which law applies? What are the different factors? Which data elements and whatnot? And that is something that evolved for the United States over about a 15-year period. The last state to have a data breach law enacted was Alabama, and that happened last year. But California was the first, and that was in 2003. So when you think about that, it's incredibly complicated, it's incredibly challenging, but at least in the breach space, you can think about things like, okay, maybe I take the most restrictive approach and I apply that consistently across the board. For something like omnibus privacy, where there is a lot of nuance into when and how you have to make certain disclosures, how you can use information, permitted use purposes may be baked in at the start, in other laws it may not. It is much more complicated and much more difficult to just say, well, I'll pick the strictest standard and I'll just apply it across the board. You actually may end up with conflicting laws. And so if you thought GDPR was difficult, imagine GDPR times 54. Right, so that is also driving this conversation at the federal level. And historically in the US, we've handled that at the sectoral level. Claudia is exactly right. So those of you in the financial space are probably well familiar with the Gramm-Leach-Bliley Act. That's the privacy and data protection standard at the federal level to handle this type of information. But there's a separate construct for healthcare, there's a separate construct for education, et cetera. And so harmonizing that and coming up with maybe a federal law that will preempt this different state and fragmented approach is going to be an incredibly complicated endeavor. So what we try to do is use the data principles that I've been talking about to really drive our behavior and make sure that the decision-making piece is done as consistently and regularly as possible. That way we end up creating solutions that help use information in the digital space. We recently became a part of the Secure Remote Commerce Initiative as a good example. Best way to explain that is sort of think about guest checkout online for people who don't want to store their card with a particular merchant. Maybe it's a one-time use or whatnot, and you go to checkout, you provide a limited amount of information, and then you're faced with a menu of 15 to 20 different payment buttons. I want to pay this way or that way and whatnot. And then EMVCo got together, created a unified standard for the payment networks that functions lightly like a digital wallet. The credentials remain with the individual. The card information is passed by a secure tokenized way. And there's a consistent user experience, a consistent approach for merchants and others. And so you're streamlining things, you're making use of technology that's available, but you're doing it in a safe and secure way. And as I understand it, there are going to be other people speaking. So I'm going to take a pause here. But I'm really looking forward to our active conversation on the stage here. And thanks again for including me.
So thank you, Elisa, for this very interesting presentation. We're now going to China with Martin Chorzempa, who is research fellow at PIIE. He joined the PIIE in 2017, and he's about to release a book on the Chinese financial revolution and why it's going to affect all of us. So please, Martin.
Thank you, Claudia. Oh, I'm missing a little picture here on the bottom left, which is going to be a beggar in China with a QR code in front of them, just an illustration of how fintech has revolutionized things. Nobody has to stand in line anymore. No one needs to carry around cash. Fintech is pretty much everywhere. And no, this QR code here is not the tip jar for this talk. It's a link to open up my, my Peterson Institute author page. I'll begin with a little bit of a story about how and why we need to think more about Chinese fintech, even if you don't want to go to China. That was when I was on my honeymoon in Thailand, and I was really excited when I found a store finally that was willing to accept my American credit card. I was finally going to get some points. But then I came in and they said, actually, we only accept Alipay or Thai baht. And that was an early indication that maybe the expansion of these companies abroad, companies like Alipay, Ant Financial, and Tencent's WeChat might actually be at the expense of American companies. And one of the senior executives of one of the leading payment companies in Europe has this wonderful quote about how not accepting Alipay for a merchant these days is like not having air conditioning in a car, which no one would do. Chinese super apps have gone abroad at a blistering pace. Ant Financial has major stakes in local financial technology companies in 9 different countries, including places like India, Thailand, and Korea. And if you include the users of these companies together with the users of Alipay, you get about 1.2 billion people. And this is their active user number, not the total amount of registered debt accounts. And on the payment acceptance side, Alipay is accepted in 56 jurisdictions outside of China, and Tencent's WeChat is similar. You see the map here of the different places that Ant Financial has expanded. Their internationalization strategy has been threefold. The first is just to go abroad with Chinese tourists. Chinese tourists spend about as much outside of China every year as something like Americans, Germans, and French together. It's quite extraordinary. And having access to that pool of money has made it pretty much a no-brainer for foreign merchants to accept Alipay and for foreign payment providing companies to partner with them so that Chinese tourists can use their preferred way of spending money abroad. The second is to take stakes in, mainly strategic stakes, very large equity in local companies, partially because of the sensitivity of finance and the sensitivity of the data. They say, if we go in and partner with a local company, turbocharge them with our technology and our expertise, that might be the most effective way. They have cutting edge technology, they have a lot of capital. Ant Financial had, I believe, the largest ever fundraising round last year, something like $14 billion with a valuation of $150 billion. It's quite extraordinary. And then the third way is to expand their brands abroad. So far, that's been almost entirely unsuccessful. And I'll get a little bit into, in the next slide, into why that is. The first is reciprocity and protectionism. The model for China to develop financial technology actually was protecting their companies from any foreign competition. So why would a foreign country want Chinese fintech companies to dominate their small local firms before they're able to get off the ground? Another is the connection with national security. So Ant Financial tried to buy MoneyGram in the United States, and that was blocked by CFIUS, mainly reportedly because of concerns about sensitive data that they would obtain. For example, American members of the military use MoneyGram to send money back home. And do we want the Chinese potentially to know the location and financial details of all the American service members who send money abroad? Probably not. The second is that the relationship with the Chinese state seems like it needs to get closer and closer to provide protection in this very sensitive environment. But the closer you get to the Chinese state, the less you have a clear line between these companies and the government, the more you wonder, is Xi Jinping going to be able to get access to some of this data? It's a big concern. And other countries beyond China have worried about data localization, including India, which Claudia mentioned earlier. The third challenge for fintech companies in China going abroad is localization. The fact that they were so perfectly suited to their domestic environment meant they didn't really get any experience competing with any foreign companies. And their super app model, which combines, that's what made them so successful in China, which combines everything from renting a bike to getting an Uber, booking train tickets, getting a loan, insurance, payments, just about everything you could imagine. Well, that ends up being sometimes a little bit clunky and slow. The Chinese so far seem to like having everything in one place, but I've talked to some of the American tech companies and they say, we've tried that and it's a little slow. There's a little bit of a delay and people leave your app. And actually, the company that WeChat invested in India has failed and said that they wanted to failed with the super app model and decided to break everything up separately, more like the United States. Finally, they lack advantages that were key to their success in China. In China, these companies already had hundreds of millions of users and an established dominance in an important niche in the market. But when they go abroad, they have to start from scratch. That's another reason they're investing in local companies. So I'll end with three important implications. One is we have to think about beyond the data flows, but also to the financial flows. And when a financial company can expand abroad without any physical presence, just by opening up a website, sometimes you get nefarious activity too. So Vietnam and Indonesia have both found that about 50% of the illegally operating peer-to-peer lending schemes in their countries were actually coming from China and had no physical presence in the country. The only way they could keep them out, though, is by banning the website. Well, they can just create another website and go there again. China's problems are able to expand abroad. And also some of these companies that were doing money laundering in China have funneled money to militias in Myanmar so that they could launder more money, and that might have led to more ethnic violence. A second is that data from super apps abroad would provide potentially a competitive advantage for China in the future as they develop artificial intelligence applications, because especially ones that would be applicable outside of China. If they only have data on Chinese citizens, that might not be necessarily applicable, but if there's a risk that it could end up being a one-way street where China is able to pull in data from all other countries, but because of its data localization requirements and, for example, the cybersecurity law, maybe the data is not going to flow elsewhere, and that provides them an advantage. And the third is that China poses in many ways an alternative model to the United States in terms of how to develop its financial system and its tech sector. And they're pitted now against mostly American payment companies And we have to look at, for example, Libra in this case, where China has been extremely skeptical about it, thinking that an American payment company is going to extend America's financial dominance into the e-commerce and fintech area, where it's been more traditionally advantageous. This is going to be an important area to watch. Thank you.
So thank you, Martin. Always really relevant to learn about what's happening in China, which is quite different from what's happening elsewhere. So right now, I would like to call to the podium Thomas Halping, who joined the HSBC in 2007 and is currently the Global Head of Payments Product Management. He was previously Senior Vice President at JP Morgan Chase from 1989 to 2007, and he's going to discuss the use of AI and data in the payments and financial sector. Thank you, Tom.
Hello, everyone, and thank you for having me. I really do appreciate this opportunity to speak. I'm going to talk about it from a slightly different perspective. I'm going to talk about it from a consumption perspective via a bank lens. Because one of the things that we are seeing and hearing from our customers is when you start to think about the drivers of more data being introduced into the payment space is what our customers are asking banks to do. And it's not just HSBC, it's basically the financial community. They are looking for us to provide them, one, with insights to their business activities. Because when one thinks about what a payment represents to a corporate customer, it's really the end of a business journey. They've made a decision to make a purchase. They've made a decision to do an M&A deal. They're trying to understand the behaviors of their buyers or suppliers in payment space. So a key piece is, how do you provide me with insights? What they're also asking for is greater control over the information that's attached to the underlying payment. Because what they're looking for is greater transparency. They want to understand where the payment is over its journey. Because historically what has happened was they've made a payment, but they had no idea where it was on its journey, especially as it went cross-border. And domestically, while they had an understanding, they weren't getting truly the end-to-end visibility there as well. So a lot of things have been evolving in that space. The last piece is they want it immediately. Business is moving so rapidly that payments right now need to move at the pace of business, as opposed to before when it was moving at the pace of paper. Let's think about checks as this started, or cash, how it started. You had to take a week, a month, to make sure, especially when I went cross-border, that this was going to happen. So the evolution of payments has to keep pace with business. And there's a couple of key components within this that I want to talk about. One of the key drivers of this is that the standards are changing that banks are now dealing with. The communities have moved to a much larger data set. Well, you'll hear it quite often called ISO, or you'll hear it as part of a blockchain, which allows for greater inclusion of elements. Why this is important is because it creates a standard. And one of the reasons why these standards are being adopted is to hopefully drive down the cost of doing processing and cross-border payments, but equally to provide a level of consistency. And that level of consistency touches on a couple of different points. One is compliance related. And I say that because the current message structures that are out there, and the Federal Reserve is going to go through a change, and they're targeting 2022 to 2025 to make this, is because the current data set is incomplete and limits the ability to properly sanction screen, to properly monitor the underlying participants in the transaction. So they've actually been pushing and driving a greater standard. You've seen it here now in the US, that they launched a real-time payment solution here in the US about a year ago, and it used this international standard. This was a big switch, especially in the US, because they went away from a proprietary format and they're adopting an international standard. What that means is the international regulators are starting to work closer together, not only from a sanction, making sure that good actors are involved in the transaction as opposed to bad, but it's also a step in the next area, which is how do you improve cybersecurity risks by having more data. What this is allowing banks to do and us to do is actually start to interrogate the underlying transaction, and based upon conditions that our customers are setting for us, we could actually say, do you want to pay someone if the account is only open for 3 months? letting them make the decision and control over their transactions, because cyber risk, and as we've just heard, it is growing more rapidly in the space. So we have to give our customers more control and more visibility so that they can make the business decision and understand the counterparts that are involved. That goes the same way, whether it's a consumer or whether it's a large corporate. Giving that transparency, giving that control is key. One of the things on transparency, and to give you a little bit of a frame, we operate today in about 54 countries around the world, and we're doing about 4.4 billion payments a day. Historically, those payments were not transparent. But like we all here, I'm assuming, have used Federal Express once in our life and understand where the package is. The industry, the payment industry, has recently done something on a cross-border basis that allows you to track a payment from the time that you release it all the way to the time it gets into the beneficiary at the distant end. This is actually a huge change, and it's all because of the underlying data is being shared and put into a repository, and it's getting to the next level of opportunity, which is we're no longer telling a customer to go to a website. We're pushing the data as an alert to the customer when it's important to them. They may not want to know about all payments, but they want to understand about sensitive payments, payments to certain counterparties, payments to certain dollar amounts, payments in certain currencies. So that fundamental shift of drivers is really for us in terms of data use and its collection, because we believe it is the new asset. It's been there for a while, but it hasn't really been valued in the way that our corporate customers and our consumers are valuing it. So we're trying to drive that. Clearly, you've heard about regulation by all of the previous speakers, so I'm only going to talk about it through two lenses. The key for us in operating in a lot of different markets is we're seeing changes happen, but they are not a consistent standard. We would love more of a standard within that space, because then we get a benefit and we actually allow ourselves not only to provide a lower cost of service for our customer, but we think a higher level of security and standard for our customers. But we think when you take a look at the European market right now, and I know we talked about one of the items, but a big item that's driving a lot more data is open banking. Okay, and it's changing the way and the landscape where in an effort, and this is really in the European community where it started, in an effort to increase competition, the European banks or community basically came together and said, we're going to be able to exchange account information, and you're going to be able to exchange payment information in a more robust way. So what they call challenger companies or banks can compete because they don't have the scale. How do we get involved in the transactions? This is critical because we're now starting to see this happening in Europe, across Europe, but also in many parts of Asia. And there's conversations right here in the US right now about what will that mean here. And if you ever want to talk about putting data out there, because it's your account information, pricing information, rate information, the expansion of data is happening rapidly. So one of the things that's happening at HSBC, because I wanted to give you a high level frame of what's happening, but how are we dealing with the amount of incremental information and data that's in our business today? One is through much more standard governance processes. I could tell you I am unable to launch a product without having to go to my information security group and have them go end to end through how I am managing every aspect of the data and where is it being stored, onshore, offshore, who has access to it. Do the underlying vendors meet our vendor management standard in terms of how that will be structured and how that will be maintained? What is our backup piece? We're also, great point before, it is one of my objectives as well, that we have what we call the conduct objectives in terms of managing data and information, and everyone is not only required to take exams on this and pass it or not, then you have a different issue to deal with, but you will literally have to be holding your entire team to that level of standard in the organization because it's everyone's job, not just a few. But I think one of the other very, very big pieces that we're seeing is we are actually partnering with different fintechs in this space because we realize that we can't necessarily manage the data best by ourselves. It's actually best managed through a combination of HSBC proprietary and using other vendors in this space, whether it be presenting the information or the data, or it could also be for actually securing the information. And because it's such a moving and growing and learning space, if you think about how the cloud is coming into play right now, and is it a public cloud or a private cloud, and how do you get comfortable with that, what information will be up there, as we were talking about earlier before the meeting, this is such a growing space. We're learning every single day, and one of the things that we've actually done is created a standard governance process within HSBC so that we could take the learnings from the 54 markets back. what is best in class? What is the standard that we want to reach and meet? It doesn't necessarily mean that we are going to be creating that high standard everywhere, but at a minimum, we want to understand what it is, and we want to make sure that we're delivering to the level that we're comfortable with, and always within a means of managing to the local regulator expectation, right? Because we can't adopt one standard if it's not compliant, but we will actually have conversations with our regulators. It's part of our standing agenda. I actually sit on the Fed Risk Committee, and we will sit there and we will talk about data standards and what's going on and how things will be evolving. And I have different people around the world, so we will sit with the regulators to make sure that they're aware of our concerns, our positions. Localization is happening in a lot of markets, but what does that truly mean? And what is local data versus information when your customer is saying, give me insights, and they're a multinational? It creates a very, very different challenge for them in the space. But I love the little example that I saw up here with the QR code. So I want to touch on that for a second. If you want to talk about how data is changing in the payment space, that QR code is jumping off the page around the world. And every time you see a country make a change, it becomes the new floor for every other market that's thinking about evolution. And a while ago, there were only a few real-time payment systems around the world. You would actually go back to 2008, and that's where it started, really in the UK. But there's over 40 of them live right now, another 18 being planned. And the QR code, because of the value to the corporate customer, because their biggest pain point is on receivables management and being able to reconcile that credit, the QR code is changing the face in the domestic market, because not only does the information move real time and the money move real time, but that is allowing them to integrate it into their back office systems so that they could turn that into working capital. And that's a big part of what data means in the bank space. It's the corporates are looking to improve their working capital. And how do they make better liquidity decisions and faster liquidity decisions? So a QR code actually allows them to take down their days sales outstanding or their receivable items. That actually allows them to understand buyer behavior of their products. Who's paying, when are they paying? And that's where they're looking for banks to provide insights, or fintechs to provide insights to the behaviors and characteristics of their customer base. So that underlying data, it's actually a very interesting one. At what line are you going beyond the level of using the intelligence in the message that they want you to provide insights with? So where's that line that you step over? And I think everyone is learning that line right now, personally. And I think it's going to be an evolving line for everyone. But the one last area I really just want to talk, because I know we're going to leave a lot of time for panels. There's a couple of pieces of technology that are absolutely at the heart of our data strategy. One clearly is AI. And we could think about that as a tool by which not only can we provide better insights to customers. So to give you an idea, we have a liquidity management tool that will actually allow a customer, based upon their payment behaviors and patterns, to say, here's your position. What do you want to do with this excess funds? Historically, you haven't had any more need for this cash, in the last week. You want to invest it. You want to convert it somewhere else. You might be short in Hong Kong dollars, but you're long in sterling. Do you want to do anything with that? Giving them the insights back on their data. The AI allows that. We're even doing that with some of our customers relative to helping their salespeople be more effective when they're out on the road by looking at the underlying data about the behavior of their buyers. So when they walk into their customer and they say, we noticed you haven't met your normal quota, or we've noticed you have an opportunity here right now to maybe you can get into another pricing tier. So using that data and the AI not only helps us, but it helps our customers make better decisions, but it's also helping us out with fraud surveillance right now, because we're asking, are these normal payment characteristics that you're used to? 1 minute, I got it. So again, just telling you how we're using AI, which is, if you haven't made a payment to someone before, is that abnormal? If it's over a certain dollar amount that's within a limit or an entitlement, is that something that you want to approve? So we're using AI in a different way. But I think one of the things that's rapidly changing the data, or the consumption of data, is something called APIs, which is the financial world is moving from a batch-based environment, really because of your smartphone devices, where everything is real-time going back and forth. Data is moving every second of every single business event or even the weekends now. The weekends are no longer weekends. The weekends are business days. They're just called weekends, if you will. But there is really, truly, we have to operate 24, 365, 7 for making payments around the world now. That is the expectations of the customers, and APIs are a big driver of that. And our customers are now having to work that way too, because they have to change their back office. So data is the new asset in the space. It's just being secured in a lot of different ways. So I'm hoping, as I'm up on the panel, you'll have a lot of different questions. I wanted to keep it at a very high level, and I know I've kind of went through this fairly quickly. But thank you for taking this time, and I look for an interactive session.
So thank you, Tom. Fascinating look at the plumbing of the system, which is becoming more and more important as technology progresses. I mean, we're thinking about payments in a way we didn't used to. So the final presentation for today is by Nicolas Veron, who's been affiliated with PIIE since October 2009. He's also a senior fellow at Bruegel. Nicolas works on banking and finance, and he's recently done very interesting work in the digital space. And actually tomorrow, he's going to present the Geneva report on the world economy, Banking Disrupted, Financial Intermediation in an Era of Transformational Technology. And if you're interested in attending this event, please register at meetingspiie.com. It's tomorrow, 8:30, right? Right. Okay, so go ahead, Nicolas. Thank you.
Thanks, Claudia, and I'll make that brief to get to the debate as quickly as possible, but thanks very much for the opportunity to speak here on this very thought-provoking panel. Indeed, the report which will be presented tomorrow is about, is about the way banking in particular is disrupted by fintech and big tech, so that's very much the background of the discussions we're having today. And I think it's important when you look at it from a policy perspective, which is very much what I'm doing. I'm clueless about the next business trends, but I look very much at what that means for regulators and supervisors and public authorities. When you look at it from a policy perspective, it's still a very early stage, and I think this is to be kept in mind. As I will say in a minute, policymakers move more slowly than business, we know that. And the policy debate around these issues is very amorphous, and at the same time you have a lot of hype, very much driven by, for example, the fact that there's a lot of venture capital money in the sector, and it's very difficult for a policymaker to disentangle the high frequency signals that come from the hype and the media coverage from the trends that really require a policy response. So I'm not trying in this brief presentation to be comprehensive. I will only mention 3 challenges for financial regulators that are already apparent, and I'm sure there are many other challenges that already exist, maybe less apparent, some of them are, and others that will come up quickly. But the ones I will focus on are the regulators' own embracing of data and technology and their corresponding culture as an internal matter. The second one is the fact that financial regulators have to work with new peers, especially in areas like competition and data, as we heard. And the third one is inevitably here at the Peterson Institute for International Economics, cross-border challenges. So this is, again, not exhaustive, but just to give a couple of pointers. So the first point is the fact that regulators and financial authorities have to embrace data and tech. And obviously, that's a challenge to them as it's a challenge for any organization. Some of you may remember the big Bangladesh central bank cyber heist that was 3+ years ago, when basically they were not, the Bangladesh central bank was challenged on their own ability to defend their own data integrity. Obviously, financial regulators are stable organizations. They're conservative organizations. They don't move so quickly, but they have to interact with new stakeholders, and particularly at startups, which move very quickly, and as we all know, tend to move fast and break things. That's a challenge. Another challenge is the fact that the regulators also have to participate in the world of data by providing data to the public, which is a very important function, increasingly important in some respects, and of course by using data for themselves. So that's the first challenge. I'm not going to expand, but just mention that interacting with startups can be very disorienting with the regulator. This is a recent article about Revolut, which is a payment and banking startup based in the UK, but with a banking license in Lithuania. So it's a full-on bank under Eurozone and European Union banking supervision. And the CEO, I think, of the Revolut was telling the Financial Times a few months ago, we didn't really have enough budget to hire a lot of great people in compliance. Now, if you're a long-standing regulated bank, generally you don't say things like that, even if that's a reality of your business, which may happen even with the best. The fact that they would say it in the public space is quite amazing from the perspective of traditional regulation. So for regulators to embrace this challenge proactively and make sure that this kind of thing doesn't happen even with very nimble, very young startups in their space with a banking license, in that case, is a big challenge. So the second challenge, as I was mentioning, is that financial regulators get new peers. Financial regulators have long been very successful at defending their collective autonomy, their collective turf, if you will, from inroads from other kinds of public authorities. A quintessential example of that is trade. Basically, you have some issues of market access in the financial sector discussed in trade agreement, but all the financial regulatory space is basically off limits to trade negotiators. And that's essentially the only industry which has this exemption. So financial regulators have their own protected safe space. But big tech is making increasingly inroads into finance, and we'll discuss that tomorrow morning as you kindly advertised, Claudia. So we'll talk a lot tomorrow morning about the inroads of big tech and fintech into the safe space of banks in particular. And one of the big difficulties here is that the regulation of big tech is still at a very early stage. Actually, you have debates as we speak on Capitol Hill in many jurisdictions about how to regulate big tech. Is it about competition policy? Is it about data integrity? Is it about a blend of the two? In the European Union, it's very interesting that Mrs. Margrethe Vestager, who is now going to be an executive vice president of the European Commission, will have both competition policy and sectoral policy of the tech sector, sectoral regulation of the tech sector, which was until this year considered a logical impossibility in the organization of the European Commission, that you would have competition policy and sectoral policy under the same hat. So this is moving fast, and the issue of data regulation, as we heard from Claudia, and as we know from countless examples, is still extraordinarily amorphous. And I'm not even mentioning national security here, but obviously financial regulators in the age of big data and big tech will probably have to exchange notes even more with national security operators, and has been the case in the past. Of course, it's not entirely new, but there is even more to come. I was struck by this statement of a number of authorities, data rights authorities, on Libra. So the Libra proposal, as you know, was in June, and in August, the 7 signatories issued a joint statement. Now, it's not surprising that data authorities would issue a statement on Libra, because there are issues of data rights that naturally come from a proposal like Libra. But what is very striking is the heterogeneity of the signatories, right? You have commissioners for data protection and related issues from countries large and small: Albania, Australia, Canada, Burkina Faso, the European Union, the United Kingdom on top of it. Reminder, it's still in the European Union, and the US. And the US, intriguingly, is apparently on a personal capacity, because Mr. Chopra is commissioner of the Federal Trade Commission, but he's not the chair. So the fact that only one commissioner would sign indicates how fledgling this whole framework is. And actually, it's not clear that this joint statement had any impact on the development of the Libra conversation. It was apparently, battered away pretty successfully by the financial regulators. And it's quite funny, if you can read the statement, how they tiptoe around the issue of working with other regulators, so basically stepping onto the turf, usually well protected of financial regulators. So the financial regulators in this case seem to have protected themselves quite successfully, and we haven't heard from these authorities anymore since that statement in the Libra debate. But it will come back because financial data, after all, is personal data. And if you have authorities which are in charge of defending the integrity of personal data, they will be interested in financial data no matter what. So there will be maybe momentous turf wars, but this issue is not going away. Another issue where the current evolution challenges the boundaries of financial regulation is cloud services. And here it's not clear exactly where cloud service providers stand in the landscape. Are they critical service providers or are they systemic infrastructure? If they are critical service providers, there is already a framework for how to integrate critical service providers, that's financial regulatory jargon, into the prudential supervision of, say, banks or other financial firms which use their services. But maybe cloud service providers are in a different category. They've become so critical that they cannot just be considered a service provider. They may be an infrastructure of their own, and in that case, they may require regulation. Now, cloud services are very reliable, but nothing is risk-free. I wanted to spend some time, we'll skip it for lack of time, on the case of Capital One. As you know, they were advertised by AWS as one of their iconic clients in the financial space, and disclosure, I have a credit card with Capital One, but then a former AWS worker was accused of a big security breach in August, and that made people think that maybe banks shouldn't, this is a headline from Forbes, shouldn't use the public cloud after all. Now, I don't know much about this case. I know it only from public media coverage, and I haven't even read all the articles. The interesting thing is that the breach was a Capital One breach. It was not a breach of AWS security systems, but apparently the breach came from a former AWS employee. So there was a connection here that is intriguing. Final point on this category, and I will be very brief, Claudia, on the last one. The state aid control in Europe, to me, gives a taste of things to come. As you know, state aid control is a part of competition policy which is unique to Europe. It doesn't exist in the US. It doesn't exist in other jurisdictions. But it's a mandate of the European Commission that has been extraordinarily impactful in the financial sector, particularly since the beginning of the Great Crisis in 2007, but actually since the late 1990s. So it's been there for over 2 decades, and the boundaries between state aid control and financial supervision in a traditional sense is still not settled. It's a subject of furious turf wars between financial authorities, not least the ECB in its latest incarnation as single supervisor in the Eurozone, and the European Commission. So that's an example which doesn't exist in the US yet, but I think gives a taste of what it is when data and competition authorities active in big tech will start interfering with financial supervision in a traditional sense. Last, but perhaps not least, cross-border coordination. Very quickly, because we'll come back to it for those of you who participate tomorrow morning as well. Obviously, there are a lot of global data businesses which are regulated as financial firms. I mentioned here SWIFT, rating agencies, trade repositories. I mention these because they're pure data businesses. They're basically without a balance sheet. So it's different from monetary credit institutions. And disclosure, again, I'm on the board of one of the trade repositories. So the architecture for their supervision so far has been based on common standards, generally soft law, and voluntary coordination. So you have agencies from all the jurisdictions, and typically they have a supervisory college or other forms of coordination, and together they supervise a global data firm or international data firm with, trying to not have too many coordination failures, let's put it that way. But this is challenged by global integration. And of course, the more deep the integration, the bigger the challenge. And again, it's a different challenge from the global monetary system. So that's why I'm not talking about Libra here or central bank digital currencies. I'm talking only about data companies, which in a way would be a simpler case of global or cross-border coordination. So the question here is simply how long the current architecture can hold. How long before there is an event that forces a failure of this loose system of voluntary coordination. And here, there are precedents in the European Union which suggest that this event comes at some point, and then there has to be a re-architecture of the systems. This is exactly what happened during the financial crisis. Before the financial crisis, even under the very long-standing framework of EU law, it was considered completely utopian to think about supranational supervision above the level of individual member states in the European Union. Now it's a day-to-day reality. It was forced by the crisis. I'm not entering into the details. So the question is, should regulators wait for the crisis that will force a new step towards coordination, or should they experiment, anticipate, be more proactive with some institutional experimentation, maybe with just a few jurisdictions participating, a coalition of the willing? There's an interesting example, which is the International Data Hub at the Bank for International Settlements. So my view is, and again, we'll talk about this tomorrow at greater length, institutional experimentation will be good because this challenge will crystallize in a more dramatic way at some point down the line in one form or another. Thank you very much.
So thank you so much, Nicolas. I will invite now everybody to come to the podium for a Q&A session. So since we are running a little bit late, I will start with the questions from the audience, and then if we have time, I'm going to ask a couple of questions myself. There is a standing mic, and there is another mic in case you prefer, so go ahead. So please introduce yourself, and thank you for your question.
Thanks so much. Really enjoyed the panel. I'm Sherry Stevenson from the Pacific Economic Cooperation Council. And I'd like to ask a question on data privacy. And I think in Claudia's presentation, you mentioned that you felt that there were some ways that maybe US companies or academia could improve on the GDPR model, but you didn't go into them. But then Elise said that actually we're in a very fragmented situation in the United States with respect to data privacy. We all know there's no federal law, there's no one single approach. And that in fact, you said now we have 54 different data breach laws. We know that companies, from our last two speakers, like to have seamless, interoperable borders for doing business. This is hardly a seamless, well, consumers like that too, but consumers don't have it in the US. They have it in the EU, and that model is de facto being exported around the world. Maybe you could comment on that and then comment on in what ways you think or you were thinking when you said that in the US we could improve on the GDPR, given the current situation. Thanks.
So thank you for the question. What I had in mind in particular was technological solutions for data privacy. What's missing right now, at least on any significant scale, is tech that can ensure automated compliance with privacy regulations. So there has been a lot of experimenting with this in the US, especially in the US. There's something also around the world, but the leading experimenters are here. So I just give you an example. There's a research project which is also eventually going to become a corporate project called SOLID at the Massachusetts Institute of Technology. What they're trying to do is build a logical model where you store all of your personal information on your device in a so-called pod. And then this information gets shared with third parties via a system that reminds closely of hyperlinks. So the device is actually where the data are, and all you have around the internet is logical references as opposed to copies of the data. Another interesting area is what I think Apple is currently the leader on, which is differential privacy. So techniques for analyzing data that do not allow data subjects to be identified so easily. A third frontier in technology is the creation of synthetic data sets based on real ones. So you have a personal data, but then you create data with a similar logical structure that does not refer to any living human being, and the AIs can nonetheless extract valuable information from it without compromising anybody's privacy. So all of this tech work, I'm just giving you the 3 examples that I'm most struck by, but there's hundreds, are mostly happening in the US. And of course, decentralized identity in the blockchain space. So if the US was to put its weight behind this effort, we could improve on GDPR in terms of having smart contracts with self-enforcing compliance instead of having, the companies have to do the compliance. Just go at the root of the piece of data and make sure it's private because of the way it's constructed technically.
Yeah, I think the one thing I tend to think about is there's a lot of really great stuff in the GDPR. There's a lot of stuff that's very complicated and nuanced, but candidly, when you think about sort of how you want to position your data protection program at the heart of the GDPR, and we're seeing this replicated here in the US, you still sort of see this attempt to strike a balance between giving consumers adequate information and control and then holding organizations accountable, right? And I do think you need both pieces of the puzzle to really make this work in a sustainable way. A lot of the privacy by design work I referenced falls in that accountability bucket, checking to make sure that you're not ingesting information you don't need, training people to know and understand when to get rid of information. A lot of this comes down to, again, good data hygiene that will actually make your business run smarter, faster, more efficiently, be more scalable across the globe when you're not just ingesting everything just for the sake of ingesting it and seeing where it might lead. Your data quality leads immediately to the ability to use these technologies like AI and whatnot. Junk in is junk out, I think is the phrase, right? So you really have to know and understand your data footprint. And these laws are a great driver at the corporate level for making that happen. I think, any law, when you sit down with it, has also downsides, right? And so I know the one thing, just as a practical matter, when you're trying to implement laws like the GDPR, there are a lot of really burdensome and prescriptive contracting requirements, right? And so when you're thinking about bringing new parties into the ecosystem and mapping out how you're going to have a document that governs the relationship and whatnot, making sure that certain sentences are exactly just so and whatnot, particularly when you're maybe a global company and you're working with another party who's not familiar with the EU landscape, just to pick on GDPR and things like that. That's the piece of the puzzle that I wouldn't necessarily want to see replicated over here. I would lean more in the direction of sort of the principled approach of sort of smartly and safely using the information and having that accountability level woven in as a way to sort of navigate that piece.
Yeah, very briefly, just as a European on the panel, as Claudia also is, I think the European experience should not be idealized. First, GDPR, as was just said, is very complex, and actually the way it will translate into actual enforcement and practice is at a very early stage of discovery, to put it charitably. The second thing is that there are many other barriers to market integration in Europe, which are national law. So if you think of a digital single market, even with all these instances of state law, I think it's fair to say that the US is closer to the vision of a digital single market than the EU is, if you look at it holistically, despite GDPR. So, two small qualifications.
Hi, Kobe Pruitt from the Mortgage Bankers Association. Real quick, Elise, you had mentioned that there are some data protection principles that you're working with. What are they, and are they available?
Yes. Thank you for asking. I didn't plant him either, I promise. We have two public-facing websites. They're both keyed off of mastercard.com. If you look under sort of being a responsible company, that quite literally, that's one of the headers. Our privacy narrative is readily available for anyone to take a look at, and that talks about our core privacy promises to individuals, how we handle their information. It talks about their ability to interact with us. For example, a lot of these laws make available the ability to come to a company, ask for a copy of your information, make deletion requests. We've created an automated portal that's made available there, our certifications that we've had to pursue. things like that. There's a data responsibility page as well. And that talks to sort of this global data responsibility imperative that I've referenced, that's trying to look at things holistically and advance not only those core, I would call them arguably privacy principles at the heart of it, but also talk on the type of things I've been talking about in terms of promoting innovation, promoting social good, and where companies fall in the ecosystem about, sitting on top of large repositories of data and being smart and thoughtful about maybe if you scrub personal information from that information set, if you aggregate, anonymize, do the kind of things that Claudia referenced in terms of sophisticated privacy enhancing methodologies, could you not use that information for social good and do analytics on it and drive things for other parties that quite candidly just don't have access to that kind of information? And so those data responsibility principles are also based on mastercard.com.
I have a softball question for Martin and a hardball question for Claudia and a medium question for the HSBC and MasterCard. Pardon? Does everybody know who you are? Oh, Gary Hoffbauer with the Institute. So the softball for Martin is, what would China's reaction be to the GDPR? For Thomas and Elise, would your institutions with their worldwide scope welcome the GDPR being applied wherever you operate, not only in Europe and Brazil, which adopts something similar, but other countries which don't? And finally, for Claudia, don't you think that the use of the phrase surveillance capitalism is pretty prejudicial? We all went through the debate over the use of the word torture, and there are other words that, they decide the case before even talking about it.
Well, thanks, Gary, for the question. I think it's actually really interesting and important, so I'm glad you brought it up. China's reaction to GDPR has been to view it as an opportunity, a strategic opportunity. Their view is that GDPR is too strict and has constricted the ability of European companies to be successful in the tech space, and consumer tech at least, and become competitors to firms in the US. And they think that the US rules are actually too lax on privacy. So they want to position themselves somewhere in the middle and say, we want to create a model, and they're currently debating this, and we'll have legislation in probably a few years that tries to balance the interests of the technology companies and the interests of privacy, which have been growing massively in China. The assumptions people had a few years ago was that Chinese people don't care about privacy. But in recent years, the companies have been in big trouble from regulators and been dragged through the mud in public. For example, the CEO of Baidu said Chinese people don't care about privacy. They're happy to trade it away for convenience. And a lot of people online strongly disagreed with him. And so this has been interesting to watch China go along with the rest of the world in this sense, but they want to create a balance which inspires others and then is interoperable. So their idea is, if they can get this right, then they hope that countries maybe along the Belt and Road, maybe other countries in Southeast Asia will have a model that's similar to theirs, and then they will interoperate and give their firms a competitive advantage in data in the future.
Yeah, and I would say we are going to extend the rights that are offered consumers globally, just beyond, and mostly, candidly, because it acknowledges sort of the state of the world, right? So GDPR for sure happened in Europe. You referenced the fact that Brazil is coming online. I think Thailand passed a law this past year. It's coming to the United States in some way, shape, or form. And as a global company, at some point, you have to kind of acknowledge that you've got that outreach and that footprint across the globe. So we are making the portal I just referenced globally available, and that should start coming online next year to time with the California law.
So going to your question, HSBC is always looking at standards and ubiquity because we think that level of consistency is a positive for the community, for those who use whatever service it is, because it creates a level of understanding. But I don't know that it's one standard that says that's the right one across the board. We actually would want to take a look back at everything that's out there in place and saying which components, I think you raise a great point, is one too far left and maybe one is too far right. And the question is, what is that point of intersection that meets the key requirements of the underlying consumers and those that need to be protected, and also in a balance with some of the value-added services and insights that are being required or requested of the financial community. So I don't think it is a one answer as clearly, but ubiquity is something that we look for constantly, whether it be data protection, message standards, because it's an easier way for the community to actually work as one.
So briefly to your question, of course, there is a value judgment in the expression surveillance capitalism, which, I mean, it's not mine. It was popularized by this very interesting book, which I was referencing. And I understand that it might sound like the value judgment in using the expression is too strong. But in objective terms, what this business model is about is making a profit from granular knowledge and ability to predict human behavior. So I still think the phrase is quite appropriate. That's just me. I think we have time for one last question, if there is one question from the audience. Okay, go ahead.
Hey, thanks so much. Christos from MIT. There was some recent research about 2 years ago from Christian Catalini and I believe Susan Athey that they did a study on some MIT undergraduates to gauge the role that people place on data. And so one of the presuppositions here is that people understand the value of their data and can forecast down the road. And yet there's some behavioral evidence about hyperbolic discounting, that we value the present more than the long run. So maybe just like one or two quick comments about the role that education might play, whether universities need to play a bigger role in that process, and financial literacy and all that sort of stuff.
Well, I think that the creep factor will actually be effective before education, because it's got a faster way of acting. I think we're getting now to the point where AIs start doing weird things that are recognizable to human beings. Like, for example, you're watching a movie on Netflix and there is a reference you don't get, and you type a query in your search engine, and after just two letters, you start seeing it completed with a reference to that Netflix show. And this is, wow, this is a moment that makes people aware of what's going on, more than lengthy explanation. Because in the studies you mentioned, I mean, you certainly have read the studies where even if you're given a comprehensive explanation of what happens to your data, you still trade your data for a like on Facebook or Twitter. So I think that, of course, education, financial literacy, explanation of how this behavioral surplus is built is enormously important. But I think it's more important for the policymaking community and academics in terms of internet users with no particular interest in internet policy. There is going to be a backlash when you start feeding in your daily life that these machines know stuff about you. And I think this is just happening now, like the past couple of months.
And I think, if you think about it too, yes, certainly what can be done to help, externally educate consumers, policymakers, stakeholders, but also focusing inwardly, right? So this is going to be a brave new world for all of us. You can't have just the tech folks who are over here working on AI be the only ones who know and understand how that model works. And if I venture to guess, sort of show of hands, if who in the room has a really solid understanding of machine learning right now, I'm going to presuppose, I won't make you raise your hands, but maybe not a lot would go up. 4 or 5 years from now, maybe a little more will be going up and going up. We're all going to be learning about this together, but I think part and parcel of being a responsible user of the technology is making sure that the parties who are engaging with it know and understand its boundaries.
Okay, so we're slightly late to close the event. Thank you, everybody, for attending this event today, and have a great rest of the week.